Is my screen up? What about my face? What about both? There we go. All right. Thank you guys so much for tuning in. We are doing Home Live. So for those of you who do not know, there is so much going on in the industry politically, with guidelines changing, lender updates, that it's humanly impossible for one person to compile everything together. And let's be honest, there's over 43 different mortgage conferences. I think there's one going on this weekend as well. And you shouldn't have to pay thousands and thousands of dollars to get all of this education and information. So what Home is doing is we are compiling the industry's best, not only our home leaders, but we are partnering up with anyone who's anyone in the industry to get you the information that you need. And we're going to give it live completely for free for everyone tuning in. So if you're tuning in, follow us at Tu Nuevo Home and you will get this update. So going straight into it, we get a question. Why does Home exist? Next slide. So Home exists for a couple of reasons. One, when I first started in this industry, I was the very first Spanish speaker at the #1 and the #2 lender. Now, we won't get into the names of who that actually is, but I recognized really, really quickly that we had Hispanics and Latinos that would work throughout the loan process, whether that's in processing, underwriting, VVOE, but they didn't actually understand how to get a mortgage. And so I knew that I had to go and build the leaders within this industry that can go and educate the consumer on how to actually get a mortgage. So the biggest question that I get, do you have to be Hispanic or Latino to join Home? Absolutely not. As you'll see, some of our speakers are not Hispanic or Latino. I'm 25% German and I was born in Canada. Like, I'm a mixed melting pot myself. And so ultimately you don't have to be Hispanic or Latino, but you do have to have that heart that wants to serve the community and educate the community. So why Home is here? Latinos are driving a $2.7 trillion home buying power, and we're only scratching the surface with less than 10% of us tapping into that market. That's not a demand problem, it's an access problem. Mortgage companies do not know how to actively market and reach these consumers. That's why the broker channel is so special, because brokers are actively taking the time to educate consumers and meet their community right where they're at. Now, this is one of my favorite statistics that I didn't recognize. Only 1% of loan originators are Hispanic. That's right. And even less than that actually speak Spanish. So if we don't have loan documents in our language and we don't have loan officers that are Hispanic, we need to raise up a community that's multiculturally aware and is able to meet the community where they're at. Next slide. Now, one of my favorite people in this industry, I'm sure you guys saw the meeting yesterday. He talked about how the stock price and the company value are two separate things. And I that really resonated with me, and that really spoke to me. And he said, one of the wealthiest men in the world said, the two won't follow each other. And that being said, I understand that in this market, it's tough out there. We've heard everybody talk about how it's hard to get deals, how it's tough. Realtors are complaining about how they can't get deals. And so I really started to resonate with this message. You are not your production. Your production is not a value of who you are as an individual in this industry. I understand that, hey, maybe you were doing 30, 40, 50 units a month, back in the day, 2-3 years ago. And now maybe you're doing 1 or 2 deals. It doesn't matter. You are not your production. So don't value who you are as an individual in this industry based on the numbers that you produce on a monthly basis. Value it on who you are, the knowledge that you have, and what you have to give to your community. So with that being said, let's talk about the market. And I'm going to bring up this next gentleman who's a very, very great friend of mine. His name is Coda Colbert. Now, I was his account executive way back in the day when he first got into the industry. And he quickly grew to be one of the best loan officers, closing about 40, 50 units a month. But this guy studies the market. He educates me every single morning. And so without further ado, Coda Colbert.
Good morning, everyone. So we got some encouraging inflation news this week. Consumer inflation rose only 0.1% in July, with the annual inflation cooling to 3.4%. Then this morning, producer prices came in flat for July, which is better than expected. And annual producer inflation falling from 5.5 to 4.7%. So we're seeing indication that inflation is moving in the right direction, but there's still a major wild card, and that's oil. Energy prices remain elevated from where they were a year ago, and we still have a lot of political uncertainty with the Middle East. Oil is moving lower, which is helping, but the broader energy shock has not disappeared. And that puts the Fed in a difficult position when it comes to interest rates. The Fed's currently holding rates because of the inflation risk, and another hike has been brought up more than rate cuts, right? Which isn't really ideal for us. Um, this morning's softer inflation data, though, markets have reduced the probability of a September hike to only 1 in 3, which is better than where it has been the last couple of weeks. One important distinction, though, is with a rate hike, right? That's not going to bring down the price of oil, which is more or less the main driver of inflation right now, and our, what we're seeing in the 10-year and all that. So the Fed can raise rates, right? Slower consumer demand and business demand, try to prevent higher energy prices from spreading, but raising rates does not create more oil, doesn't increase production or reopen, shipping routes of anything like that, right? So it's not really going to adjust the problem, if that makes sense. If the Fed gets too aggressive in cutting a energy-driven shock, then there's a risk of slowing the economy without actually solving the problem. And that brings us to the Treasury market. The 10-year Treasury is trading around 4.7%, which is 10-year Treasury is the most important number for us to watch for mortgage rates. But the Treasury yields aren't just about the Fed anymore. The United States is financing a large amount of deficit, including lots of government debt. And that debt has to be bought by other people, which tends to be international investors. So when the global demand for treasuries is strong, right, our yields are low. But when investor demand is demanding more compensation for inflation or other risks, then our yields tend to be elevated, which is where we find ourselves right now. That pushes us into housing. The Federal Reserve does not directly impact our rates, but the 10-year does. The last Freddie Mac average for the 30-year mortgage rate was 6.69%, which we are floating about 200 basis points over the 4.7 10-year Treasury. For the rest of 2026, I'm watching inflation, oil, and obviously Kevin Warsh and the Fed when it comes to their comments on oil and inflation. If oil stabilizes, inflation continues cooling, Treasury yields should start coming down in a more meaningful way. If we could get down in the 4.2 range, I definitely think that would be a lot better for our housing market, or under would be phenomenal. And that's where we could see a real relief for our housing market. That's all I got.
Bringing me on, but there I am. So, hey everyone, Jay Rodriguez here, our VP of Government Affairs. And last time that we had Home Live, we dove into updates that were happening and coming along the industry. So the latest update that had been in play was the request for information, and that was for the CFPB. So one of the biggest pieces that we've actually been seeing in the CFPB and all these changes is that they have been asking about the TRID. TRID is the big entire regulation that changed from using a good faith estimate to using loan estimate, using closing disclosures, and all of the corresponding waiting periods that we've seen in play. So these rules, they've been in place since like around 2013, and this is something that is changing significantly, where we're going to have the opportunity to go ahead and have this be a better experience for clients, better experience for brokers. Some of the changes, and again, this is at this point, this is the industry given the opportunity to give feedback about what could change, both from nonprofits like the Broker Action Coalition, like the National Association of Hispanic Real Estate Professionals, NAREP, as well as different other community banks and MBA. So some of the big things that I'm really the most excited about for the opportunity is to be able to have a opportunity to not need to have the 3 days after you've signed your initial closing disclosure to have to wait for the right for rescission. What we see for a lot of our transactions, this is something where people are they're signing their documents, and then you have to sit there and you have to wait, and their loan doesn't fund, but they were already given the 3 days right of opportunity to go ahead and see what had actually occurred within their transaction. So this is something that's being proposed. We still believe firmly that having a waiting period makes sense and is safe for the consumer, but at the same point, there's times where you shouldn't need to necessarily have to go ahead and wait that entirety of the rescission if you've already received your documentation. Something else that also is huge, especially for the broker community, is something that's huge for the broker community is a little bit of APR, which I'll focus on a little bit later on. Another piece that we were talking about coming up August 3rd, that was when Fannie Mae and Freddie Mac, they retired their limited reviews. Now, this is super important because majority of first-time home buyers, one of the most affordable types of purchases is a condo. We're seeing that 40% of all condo loans were closing on limited reviews. Now, these limited reviews, you weren't needing to actually take a look at the financials of the institution. You didn't have to look at the budget. You didn't have to, the HOA. We really just had to confirm that there was no maintenance that no deferred maintenance on the health, but you didn't have to look at the financial stability of the project. So this is something that definitely will affect consumers and Hispanics to be able to go ahead and purchase property. I think ultimately this is something where you have a pendulum swing that went from very little regulation to now we're having a lot more regulation, but hopefully we'll get somewhere in the middle. The big piece is now we're going to be having to bring all of these associations that have seen significant cost increase through COVID, and of course inflationary increases for all this deferred and pile-on maintenance, that they're going to have to go ahead and bring everything into effect. But that means that when you purchase as a first-time buyer, you don't necessarily always know how to go ahead and be on your board, how to go ahead and be within your HOA. And this could cause something that could be out of your control if you're in a property that is not being adequately managed. So while it's something that is going to be painful as we're getting communities in compliance, it doesn't have to be something that's a complete roadblock. This is something where we are seeing that there's opportunities for us to be able to go ahead and use alternative programs. We have other lenders that are portfolio lending. We also want to make sure that we're getting ahead of this. This isn't something that you want to go ahead and give to your clients and your real estate partners on the third week of the transaction. Order those association docs in day one. And an even bigger piece is start partnering with agents that take on condo listings. Start going through and kind of helping them review. A lot of our lending partners have dedicated condo teams. So they'll go through, review with you about what's going to be possible. And at the same point, those same lenders, if they can't do an agency, they'll most likely say, hey, we have this opportunity to do a non-qualified mortgage. Something that's going to be interesting was we've seen a lot of lenders that have said, hey, we still are doing limited condo reviews for our non-QM portfolio loan products. There's other lenders that have said, hey, we're following Fannie. We're going to go ahead and now need to do the full review on every single file. So it's now just knowing that you have an option as a broker and that you can go in either direction. Something that we talked about last time is on the unfinished balcony inspections, SB 326. We talked about symmetry lending, not actually having any condo approval process on a first or a second home equity line of credit. And they even do that for rental properties too. You could even go through and do a first mortgage with either a credit union loan. Advanced Federal Credit Union is an amazing lender as well that has a much more easy condo review process. They're amazing for that. They've been doing this for a long time, but they also will allow an outside second, like asymmetry lending, to be able to go and have something that's still competitively priced for your client, your first-time buyer. We talked a little bit about ITIN as well. Of course, that's a huge passion for our market and for our organization. So First National Bank of America, they've been in the biggest player for the longest time. They again go to that 85% loan to value. Another player that's out there is Valier Financial. So Valier Financial, you'll find that they may not be as aggressive in terms of a guideline basis of being able to go ahead and get every single transaction done, but they also do the bank statement loans as well, and then go to a 90% on full document. Alt doc is still 85%, but it's just knowing that there's multiple options that are out there. And the piece that we were talking about for non-warrantable condos in this entire translation, it's just because it's not going to fit Fannie Mae, Freddie Mac right now, doesn't mean that when you're going and you're trying to price it and you're trying to talk to all of your lenders, you don't have to automatically think that I'm going to get a non-warrantable condo hit. Now, it's not sometimes it's not crazy compared to non-QM. That might just be like maybe a half point, a point in price, maybe an eighth or a quarter in rate, but it's worth looking through about what makes you non-warrantable for that product as you're going through and helping your clients that are buying condos and your listing agents that are listing condos and seeing about what is the best way to structure a deal, especially as we know that this will normalize over time, but there's going to be a little bit of pain as we're getting there. So something that I was alluding to a little bit earlier, something that comes up often is explaining APR to a client. And one of the hardest parts about this is when you are in retail, it's calculated differently than if you are a broker. Now, there's something as a broker being borrower paid and lender paid. On lender paid, your compensation is similar to within retail, it's just disclosed. But the credits, those are already all shown, but you're not having the borrower actually shown as being paying for your borrower paid origination. In a borrower paid transaction, when you have those credits and the credits to see the charges, those credits that are exceeding the charges, that actually doesn't count to reduce your APR. So this is something where if you're just a client and you're looking at two different sets of disclosures from a broker, or broker A or broker B that did a lender paid, or retail, it's something where you actually could be saying, hey, I want the lowest APR loan, even if the 6.375 in this example actually has lower net charges for you because this credit's exceeding that charges. You'll see that that's something that makes sense to take. It is a cheaper loan for you as a consumer. It's not the way that TRID was designed to be able to go ahead and come into play. So this is something that the Broker Action Coalition has requested the CFPB to look at, and they've been amiable both in the response for information as well as just kind of direct lobbyists in speaking with it. But this is something that I think is going to actually lead to a very high likelihood of change. It also is something that is going to help those that serve veterans. If we go, one of the other things that they're talking about is actually putting, and the way to affect this is to put the credits, not just on the side of the loan estimate, but actually have it be in the same box A, the origination, that you have your underwriting, the lender processing fee if you're doing it as a correspondent lender, any points, but also put the credits in that same box, similar to how it was on the good faith estimate of old. So to be able to go and have that be like a net, like here's your charges, here's your credits, and then you have a net charge right there. You're not making the client have to add up everything afterwards, because even APR doesn't figure it out correctly if you do it that way. What this also opens us up is to the opportunity to have the VA 1% rule. That is going to be something that's going to allow us as brokers to be able to do more transactions as a borrower paid transaction, as opposed to having to always go lender paid or only work for a non-delegated correspondent lender or a retail lender. There's certain wholesalers that are not going in the full spirit of the law and they're doing it, but that's something that over time there's risk involved and going to that. So it's much better just to go ahead and even the playing field, be able to go ahead and serve clients in the best way possible, and and be competitive in that way. So these are a couple of the things that have been coming together. One of the other things that had actually been in that request for information and NAREP's request in the recommendation translated disclosure forms, having consumer guides in Spanish, plain English. Of course, we're hugely passionate about language access. And this is something that they, in every step of the way, makes sense to go ahead and have an opportunity to go ahead and have the documents that you're reading in the language that you first learned to count in. We did go ahead and announce that the August 4th was the DHS work authorization rule. So that comment window closed on August 4. Thank you to everyone who had submitted a comment on that. On this, we're going to go and continue to see the CFPB go through, read everything. It's kind of interesting because we went from the CFPB that went to a place of trying to shut down to realizing, okay, we actually are instilling a person that's going to go ahead and be leading the CFPB that actually has a history in being within banking regulation. And so it's looked at favorably. Okay, the administration is actually going to try to do something with this watchdog organization, this consumer organization, that has a meaningful purpose. And for brokers, it's much easier to work in a climate where you're having one organization that is you have to go ahead and adhere to, as opposed to now having all these different states that might have conflicting rules. That nationwide organizations, even if you're a broker and work in one state, lenders like UWM, any lender out there, they're not just working in one state if they're a wholesaler. So they're going to go ahead and be having to navigate this. Having one organization, being able to go ahead and wrap this all together, much better than having no nationwide standard at all. So on this, we continue to go ahead and look at non-permanent resident guidelines. We have, of course, our ITIN options. The big piece is, as we're seeing some kind of changes within DACA lending, and we're going to continue to see these renewals occur. Just know that just because you get a no from one lender doesn't mean that it's not going to go ahead and be a yes from a lender over here. What we're seeing is that there's a big fluctuance right now. Definitely reach out to us as a resource if you're having clients that we're getting approved before and weren't able to go ahead and be approved now. And if you're seeing, hey, my lender that I usually go to, they're having a difference of opinion. We're seeing this left and right. There are still lenders out there that are working through within non-permanent resident lending, but it's something that definitely is fluid, and it's something that knowing that you have multiple options is absolutely paramount.
Awesome. Thank you so much, Jay. That was freaking amazing. I don't know if you guys were able to understand all of the knowledge that he gave us, but he basically went and searched policy updates, what lenders are doing, just to give you that information in real time, because this is actively changing. Like, I had a broker owner call me the other day that literally said, Rogelio, 2 lenders denied my file. What update happened? Quickly, I was able to go to my team. Boom, there was a change that happened June 8th. Great. These 6 lenders adjusted. These 5 lenders didn't adjust anything. Go to these 5 lenders. This is why Home exists. We're that community that doesn't have the walls. We want to share that knowledge with everybody so each and every one of us can be successful. Now, this next person that I'm going to bring onto the stage is one of my favorite individuals. His name is Bryce Gonser. He is the broker owner of Fulcrum Home Loans, one of the top brokerages in the entire nation. And what I love most about him isn't the fact that he does a bunch of mortgages and we nerd out on mortgages. It's the fact that he is a leader of leaders and is focused on building the next generation of leaders. And he called me recently and he said, Rogelio, I have a passion that for coaching and training, and I built a successful team that I want to give back more. And I said, this is such a great opportunity because I'm busy coaching up the CEOs and the broker owners and helping them go from, 10 loans a month to 20 loans a month, from 20 loans a month to 50 loans a month, from 50 to 200, that I need someone that's in the trenches with loan officers, and you have the right heart and the right spirit. So Bryce is going to be joining our team as the home coach, and he's going to be coaching you guys up for the next 90 days. But don't take my word for it. Listen to what he has to say. I promise you're going to leave changed with a just renewed mindset. So without further ado, Bryce Gonser.
Thank you, Ro. Happy to be here, guys, and a lot of information that I want to kind of unpack as we embark on this 90-day journey together. So I've been in the business for 7 years. That's not a whole lot of time. There's probably more than a handful of you, if not majority of you, that have been in the industry longer than me. But I come from a coaching background. So I grew up here in Idaho, played collegiate basketball. When I was done with that, I quickly realized that I was not going to go play with LeBron in the league, being a 6'3" power forward. So I pivoted and ended up training professional and collegiate athletes for a number of years. And I was hungry for more. I wanted to make more money. I was, kind of an entrepreneurial spirit. And at 21, I bought my first house. And that's ultimately what led me into the lending industry. And I quit my job at a handsome salary as an 18, 19-year-old kid and went 100% into commission-based loan officer land. And had a mortgage to pay and said, we better start closing some loans. So fast forward, I went from retail to banking to ultimately into the broker world and becoming a broker owner. And so Fulcrum Home Loans is my company. And, I've been very blessed with the relationships that I've built, both with my referral partners, but also within my team. I have an amazing team, an amazing company, and that we built out great originators, but also a great ops team. And as you guys know, you have to have the ops that's really the back end engine that, gets your CTCs in a timely fashion and keeps everything moving. So I've coached, a handful of loan officers throughout my career. All of the loan officers within my company, I continue to coach. And today, what I want to share with you guys and really just leave you knowing is what the next 90 days looks like. And I want to give you a 10,000 foot overview of what I want to coach you guys on. And the first thing I will say, guys, is that I do not know everything. There's probably people that do more loans than me on this call, and there's people that do less loans than me on this call. And what I want to share with you is what I've learned over this 7-year journey, because it has been thousands of hours, hundreds, if not thousands of reps. And I know that I can share with you, but you can also share with me. And that's what I'm excited about, is that it goes both ways. So today I'm going to talk about the gap in your production. Now, when I say gap, there's going to have a gap, you need to have a ceiling and you need to have a floor. And that's what I'm going to talk through today. The ceiling represents everybody's potential. And if I'm going to be honest, most of us, we all have the same potential, meaning, anybody can go and close 20 loans, 30 loans, whatever your ambition is, we all have the same potential. Not everybody has the same floor. And so what I mean by that is that your floor represents your day-to-day activities and what you're saying yes to and what you're keeping yourself accountable to. A really good example, because I'm a former athlete, big basketball fan, is the difference between the ceiling and floor of Steph Curry versus Jeremy Lin. Now, most of you guys probably know Steph Curry. His shooting potential, and without a doubt, probably the best three-point shooter in NBA history. The reason that he is so good is not because he can go out and score 30, 40, plus a night consistently. It's his floor. It's what he says yes to on a daily basis. And in order for him to, reach the accolades and the levels that he has, it doesn't happen by accident. But his floor, what he has said yes to day in and day out, 1,000 made shots every single day, is what has earned him this superstar, spotlight. Versus, if you guys remember Jeremy Lin. Jeremy Lin had a crazy run, Linsanity, if you guys remember that, where he played at the Knicks. And this guy just, went from a nobody to a couple months of consistently hitting 30, 40-point nights, absolutely going off at the highest level of basketball in the world. But then he fell off. And the difference between the two is not that they could go out and score those points, but it was their floor. It was what they were consistently doing on a day in and day out, week in and week out basis that ultimately separated the two. And so this is a grinding industry. It can be very stressful. It can be taxing. But in order to progress, in order to feel that fulfillment within your own loan officer journey, you have to be able to close that gap. And that's what I'm here to talk about with you guys. So over the next 90 days, this is what I'm going to be talking to you guys about. I have narrowed it down to 4 simple gaps. They are an activity gap, a systems gap, a leverage gap, and a leadership gap. It really is that simple. And all of you guys have so many tools. Most loan officers don't need more tools. We need a playbook on actually how to run them and a framework that's going to stick and be able to be implemented moving forward. And so your activity gap, that's the day in, day out stuff that we have to do. That's the prospecting, that's the outreach, that's the tracking. And if we're not tracking it, then it's just all feeling based. But what I see a lot of loan officers fail to do is they don't actually have a playbook here. They just, if they're slow, they do activity. If they're busy, they ignore it. But depending on the level of loan officer that you are, at, how many closings you have, this is going to look differently. And each, tranche is going to have a different playbook. But you have to be doing it consistently based on what your goals are and what your current activity levels look like. Systems gap is a big one. A lot of us, a lot of loan officers are go, 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 and everything lives up here in our head. We don't have something written down on paper for not only ourselves, but also for our team. And what that can do is cause a ton of chaos if systems and processes are constantly changing. Not only is it taxing on, us or our borrowers or referral partners, but it's also taxing on our ops team that thinks completely different than a sales leader would. Leverage gap is another one. You ultimately can only do so much on a given day. There's only so many meetings you can take, so many pre-approvals, so many, sending off new files, that you have to be able to have a team, and you need to be able to leverage your time to be spent in the highest paying, hourly rate. In order to do that, you have to have the right who's. And I have found a playbook that has worked well with me, that has allowed me to leverage not only my time, but allowed me to share and coach with others to do the same. And the very last one, and the thing that I really have never seen in the mortgage industry, is I was going from retail company to banking to mortgage broker. I never had a true leader, but there is a leadership gap in each one of your businesses, whether you're a brand new loan officer just starting out or you're a broker owner. The leadership gap is immense. And ultimately, your job as a leader is to empower and encourage the people that are around you. And I see a lot of gaps, a lot of blind spots within this industry. And the yoke of leadership can be heavy, but it's so immensely powerful that it's going to allow you to go kind of to the next level, right? So here's a quick example of some of the things that we're going to break down, because I will get pretty tactful. I'm a big systems guy, so I want to be able to give you frameworks that actually implement these things. But here's a couple of examples of how this stuff actually shows up. So if you're a brand new loan officer closing, 1 to 5 deals every single month on that activity gap pillar that we talked about, one of the things that I see missing here is a lack of pillars. What I mean by that is that we need to have legs of business to stand on. You can't just have one approach. It can't just be, going to events. It can't just be cold calls. It can't just be, presentations. You actually have to build a book of business depending on what you like to do, what fulfills, kind of fills your cup up, but also the hard things, the cold calls, the face-to-face meetings. That's how you build a book of business. But you can't just have one leg to stand on. If you think about a chair, you normally don't see a chair with just one leg. It's got 3 legs. It's got 4 legs. You need to have the same approach to your business, right? For systems, a huge gap that I see is when you start to actually do loans, there is no systems that are in place. The process, again, is living in your head. And at this point, if you're closing 5 to 10, you have who's around you. You have people around you that are looking for stability and support from you as their leader. Now, whether you're just a loan officer, you're a broker owner, you're a team lead, regardless of the title, you're still a leader. And we have to have what I like to call a line of acceptability on what is our standards and what is our expectations, right? So those are both tactful systems as far as how we hand off a loan, how we, take the file story and pass it on to the processor. But it's also things like, what time do we show up? What time do we leave? How do we communicate internally? How do we communicate externally? All of those things have to be laid out and established within your team, within your company, so that we're all saying yes to the same thing. Because if we're not saying yes to the same thing and there is unspoken expectations, you're going to start to get miscommunication. There's going to be friction, there's going to be resentment, and you're going to have more fires to deal with than you probably want, right? Leverage, okay? So again, this is most loan officers struggle with giving up control. If you're a lot like me, I struggled with this for a very long time. I wanted to do it all. In order to scale, you have to have the right people in place. You need to be able to take your best use of time and amplify that and allow someone else to backfill the rest. So this is actual people and positions that need to be established, especially if you're wanting to grow. Going from that 10 unit a month to 20 unit a month, that is a massive jump. You can't do it by yourself. You have to have the right people in place. And finally is the leadership, right? Doesn't matter if you're brand new, closing 5 to 10, you're 20 plus a month, there is leadership that is needed on every single level. And a lot of that goes unspoken within the industry. And I know for me personally, when I went from coaching athletes to coaching people, it was a big mindset shift. It was very difficult for me to figure out, like, what does coaching look like? And you need to be doing coaching, not just to your loan officers or your sales team for within your organization. You have to be able to coach your ops teams too. You have to figure out what their desired future is, what gets them excited about the future, and how can you motivate them? Because it's not the same as a loan officer that wants to go and close more deals. Your processor has aspirations and goals as well. And leadership is required in order for you to have a tight-knit group and team that can function at a very, very high level, that's not going to get burnt out and is not going to, ultimately leave. That's what we don't want. There's a lot of turnover in this industry, and I think leadership is a big piece of it. Next slide. So my question to you is, which gap do you have right now? And if I'm being honest, there's probably a couple of different gaps, right? We're not tracking metrics. We don't exactly know what our metrics are. The activity gap is huge. What's so difficult about this industry is that the results don't show up right away. They show up 30, 60, 90 days down the road. So it's not just about the playbook, it's also about the mindset. How do you know that you have the right process when the results are not showing immediately? That's what we're going to unpack over the next 90 days. Systems gap, like I said, what I like to call this is the line of acceptability. What are you saying yes to? What is your team saying yes to? How do we do X, Y, Z? Is it documented? And is it recircled or resurfaced on a weekly or a monthly basis to your team? It's not just about printing something off on a Word doc and saying, hey, this is what we're going to do, and then never talk about it again. You have to have a common cadence. You need to have common language. You need to be able to circle back to it so people can identify, am I above the line? Am I below the line? And when it's that objective, it takes the subjectivity out of it, and everybody can self-identify. Your leadership and your ability to scale is going to become a lot easier. Again, what is your leverage gap? Who's your right who's? Probably need to have someone building your files. Probably need to have someone doing some lead follow-up, right? You can't do it all by yourself. You probably need to stop chasing conditions, or we need to coach your processor in order in a different way so that they can empower, or you can empower them so you can go get more business, right? And then finally, the leadership gap. Are you having one-on-ones? Are you training not only your LOs, but also your ops team? What does that look like to have an effective one-on-one? And what is the different coaching frameworks that you need so that you're not just sitting down and saying, how's it going? That's what we're going to chat about, and that's what we're going to be doing over the next 90 days. So each session is going to cover each one of those gaps in detail, and it's going to be applicable for every single LO. So it doesn't matter if you're closing 1 deal a month or 20 deals a month, there will be something that you will take away from each one of those meetings. And I'm looking forward to diving in with you guys and learning with you. So Ro, thank you again. This has been awesome, and I'm looking forward to the next 90 days.
Thank you so much, Bryce. Before we let you go, I have a very quick question for you. So, coaching in this industry, let's be very transparent. I'm gonna be very vulnerable with our viewers right now because we have we have quite a few viewers on YouTube and also on Instagram. But I want to be very vulnerable. Coaching is kind of like credit repair. The results are not guaranteed. So
Right.
let's dive into a little bit about how you have to have a certain mindset and have a heart that's willing to receive that message. Like Bryce, I was getting texts from people that have been in the industry for 20, 30 years that were so impressed with some of the knowledge that you are dropping. And I just want to unpeel some of those layers and really reach the hearts of the viewers to say, you could have the best coach in the world, but if your heart isn't ready to be honest with yourself and receive that, you can't get from step A to step B. And that's the biggest issue that I see in this industry, from broker owners, from industry leaders, people that are leading wholesale channels that are leaders in this industry. So I kind of want to unpack that for a minute. Since you have seen retail and wholesale, go through the mindset a little bit and the egos that you have seen and how you have to have the right heart to receive that coaching.
Yeah, I think that you hit it right on the head at the very end. You have to be able to drop your ego, right? You have to be able to say, again, it doesn't matter at what level you're at. It could be brand new, you're kind of in that middle tranche, or you're a seasoned vet, right? If you have goals of, doing more, because this business can become monotonous, it can become mundane if you're doing the same thing again and again and again. So I think the first step for anybody is to be able to say, hey, I want to have a fulfilled, passionate life. And if I feel like I've kind of gotten in that rut, then I probably need to drop my ego, and I got to figure out Who do I need to be around? And so typically when I've gotten in that rut, it comes down to a couple things. Number one, I need to surround myself with new people. If I'm around the same people over and over again, I'm not getting to where I want to be. So you probably need to have a new person or persons within your life. Oftentimes that comes as a coach, right? Because they've been there, they've done that. Doesn't matter what their age is or what their production level might look like. Again, I think we can all learn from each other, but you have to surround yourself with new people. The second one is you have to have new systems, right? If you're wanting to go to the next level, and that next level can be subjective depending on the loan officer journey. Not everybody needs to close 30, 40 deals a month, right? But you should be wanting to grow, right? Both as a loan officer, as a leader, as a person, and also in your personal life. Like those are different tranches that I think a good coach should cover, not just about how to be the best loan officer, but you need to have new systems in place in order to get there, right? And then the last one is you need to have new ways of thinking. And that's really, really hard for a lot of people. And I feel like that's really where the vulnerability and the ego drop have to come from, is we, as human beings get stuck in our ways. And it's really hard to begin to think differently. And I think that's a quality of a good coach, is that they can make you think differently about these different tranches, that we're going to be talking about over the next 90 days. And that will hopefully ultimately inspire them to, embark on a new exciting journey to level up in different areas of their life.
Absolutely. Now, last question before we let you go. Bryce, you are the man. Like, you walk into rooms, people know who you are. And, it's very easy to have an inflated ego, especially as a broker owner, as a chief growth officer, as a top producer. Like, normally when you become a broker owner or a C-level leader, your production drops off. You've managed to stay consistently doing great in this industry in a downward market. How have you kept your ego in check and remained so humble?
Man, I think, again, I haven't been in the industry super long, but those 7 years, I feel like I've lived 30 different lifetimes within there. And I would say, when I first came into the industry, I'll be the first one to tell you, I had a massive ego. I was very confident, if not very cocky with, my approach. And that was really just coming from an athletic background of, hey, I'm the best, and I'm going to, rise to a very high level. But as I progressed in my career, I eventually came to the realization that being number one and getting every single deal and, doing the most and showing everybody how much I was working was actually not fulfilling my cup. And so now at this point in my career and in my journey, I continue to operate at a high level, and I'm able to be the number one producer in my company. But that's basically just to set the standard. Because if I'm coaching and I'm giving out these frameworks and these tactics, and I'm not actually living by them and doing them, for me personally, I just feel like I'm talking something that I'm actually not. I'm preaching something that I'm not actually doing, right? But truthfully, at this point in my career, I get more satisfaction from doing stuff like this, from coaching one-on-ones or group sessions with my loan officers, because it's more fun for me to see them have a light bulb switch, have them start to think differently, start to implement a new system, and, have them come back to me and share a win. I got a new agent meeting. I had a new all-time high in production. Like, those wins are so much more fun for me than me ripping a new loan. And at this point, I'm just continuing to practice what I preach. And I've been very blessed to operate at a very high level. But the coaching piece and the giving back has been a lot more fulfilling, and really what I'm more passionate about than just doing more loans.
Wow. Well, Bryce, I have been able to witness you not only, change people's lives and get them better and get them producing more, but you have impacted my life. You have helped me. You have coached me up. So thank you so much for being an amazing human. I'm definitely lucky to know you, and I'm so excited to see what is next for this chapter for you. So thank you for your time. So we're going to keep it going. So that being said, there is a QR code on the screen. Join Home now. You get free access to this guy's coaching. Like, it's not going to be free forever. So when I first started this movement, I was very hyper-focused on not creating another organization, not being in a stuffy casino floor and where people are chain smoking, gambling, and, presenting something that where people are not listening. I wanted to actually give people education and something that they can learn from. So not only are you going to get this free coaching, but I'm about to bring a next gentleman up to the stage that was one of our very first home scholarship recipients. And what I absolutely love about him is he goes into rooms and people are like, man, you're just in this industry for a year. How did you grow so quickly? How are you able to understand the market guidelines, what lenders are doing? Like, I am so impressed with your growth as a person. And again, this is feedback that I get from leadership, from CEOs of multi-billion-dollar companies that tell me that this guy's growth, that he is able to hold his own in a room compared to people that have been in the industry for 20 or 30 years. And I really wanted to stress that that's the difference about home. Home is a community where we are leveraging everybody. It's not about one individual. It's not about Ro. It's about the army of people that believe in you. And so I want to introduce Isaac Ramirez, our VP of Education. And I wanted him to touch a little bit on how he's been able to grow, what his testimony has been, and how home has changed his life.
Oh, thank you, Ro. That's a very, very kind introduction that you have. I really appreciate that, and it's been an absolute blessing, to say the least. From over the past year that I have made that transition right into this industry. But I wanted to really tap into something, guys, that when we talk about joining home, I don't want you to just think about it as another membership, another organization, another expense, because at the end of the day, I want you to think about it as an opportunity to be a part of something bigger than yourself. Okay. This is why I joined the industry, like for this reason, because I knew that by the work that I was doing, it was a part of a bigger reason other than just doing it for me. Because the purpose of home also isn't an obligation, it's an opportunity. It's an opportunity to connect with people like we just witnessed with Bryce, with Jay, with Rogelio. It's an opportunity to connect with people who are growing, learning, leading, and committed to making a difference in this industry, because we all have the heart in order to serve selflessly. Okay, I believe there is something very, very powerful about bringing the right people together. And I think over time, sometimes God just brings certain people into the same room because he sees something that can happen through that community that couldn't happen on an individual level. And one thing to remember is that the community is a benefit to something that we are building together, right? Because everyone's coming into the room, one person has the knowledge, another person has the relationship, another has the resources, another the experience, right? But when we bring all of that together, something becomes possible that wasn't possible before. And that's what home is. That's home. And a membership isn't just about what you can receive from this community, but it's also what you yourself can contribute to the community, right? Whether it's your knowledge, whether it's your relationships, your experience, your story, right? Or even your leadership, because we know that there's a gap in leadership in this industry. Because there's somebody in this industry, and I can speak for myself, who may need something that you already have. Okay. So because if you feel kind of uncertain, like if you're in a situation even similar to Bryce, where he's like, man, I feel like there's something more. There's something more that I can do. There's something missing, right? That's going to fill my cup. There might be somebody else either in this community or in this industry who needs you because they are looking for what you need. Okay. And it's also, that's the power of community. Okay. And ultimately, I believe we've been given these relationships and opportunities for a reason. And it's important that the question isn't just what can home do for me? It's what can happen through me because I'm connected to home. Right. Remember, the community is the benefit, right? But it's about the people. It's about you. It's about who you are and who you want to contribute to be a part of it. And the community is the benefit of what the result is from that. Okay. You yourself can change the world by changing the life of just one person, just as Rogelio, just as Jay, just as all the other ladies. EC's Bravo, okay, the COO, right? She directly changed my life, right? Because of me being involved into this industry and into this community that we ultimately have all built because of the heart that we all have. Okay. So when you are considering, becoming a home member, just don't look at the benefits, look at the people, look at the relationships, look at the opportunity and look at the purpose again, because if you believe in what we're building, then we want you to invite you to be a part of it. And don't just watch it, right? Build it with us. Be a part of the resources that we have. Guideline Buddy is there to help you as a new loan officer, right? Instead of reaching out to AEs and doing this other stuff, it's a benefit. It's a complementary of what we are doing. And we encourage you to not just watch it, but be a part of it and build it with us. But
Isaac, I have a couple questions for you. So, I mean, you've been able to witness, like you've been a home member for over a year now, for probably about a year and 6 months. So talk to us a little bit about the progression of home and how quick we adapt, how quick we pivot, the leadership team that's behind it. I know everyone sees, this guy as the face of everything, but realistically, I'm not the one that's, yes, I'm leading, but it's everybody as a community that's really building this infrastructure. And even like Guideline Buddy, like the fact that we have some of the best technology that, just to be fully transparent, this technology caught Morgan Stanley a discrepancy in some of their internal guidelines. So that being said, like talk about some of the people and the powerhouses that are building this up and the transition that you've seen.
Yeah, it's incredible. I mean, I cannot believe it's only been a year, right? Because of how much has happened, how much has evolved. But I think it's because of the exposure, but also, again, the people's heart internally of why they're doing what they're doing. I mean, it's been insane, right? It hasn't always been peaks. We've gone through some hard troubles and some valleys that we've experienced. But I think all of that has been molding us into what exactly we see today. And it's going to continue to mold us because it's not like we have a perfect product, right? It's not like we have something that's it's just ready to go, right? It's going to continue to evolve. It's going to continue to adapt because that's who we are as leaders. And it's incredible to see the growth of yourself. I think has been very beautiful to be a part of. And then of all of our other leaders as well, Isis, Manolo, Fidel, Jay, everybody else, Danny Velasquez, right? So to be able to have access, right, because of what this community has built, it's been an absolute blessing. Of course, even my own growth, over the last year.
Absolutely. We're about to get to Q&A in a quick second, but before we do, I feel like being a little vulnerable. Like Isaac, you have, let's unpack me as a leader. You have been able to, you mentioned my growth. Let's be a little vulnerable with our viewers and talk about how starting a movement like this and self-funding it isn't easy. And you've been my right-hand guy that has been able to see me go through everything. So let's be a little bit vulnerable with our viewers and tell them a little bit about the leadership secrets and how everything is not perfect. Everything is not what you see on Instagram. That's just what the public sees. But behind the scenes, to make all of this happen, what really happens behind closed doors?
Man, I think I think very carefully, right? Because I want to be able to articulate a message that I feel is the truth, because that's what I think what a lot of people are surrounded. They're seeking wisdom and they're seeking truth. And that's what I feel by our relationship that we have is we're able to be vulnerable with each other. We're able to speak the truth and the hardships that we have endured and that we currently are enduring, right? And being able to lean on our spirituality as well, I think has been huge to really just dissect on what it is that our purposes are. Almost every day it's a phone call. Man, we're going through this, or this came up, or man, what do you think about this? What do you think about that? Right? I think that's the beautiful part of it, though, is that there's no self-interest when it comes to having those tough conversations. It's always just about giving. And for you, Ro, it's been an absolute just blessing to see and just like see you evolve, because I understand after hearing your hardships, hearing what you're going through, right? Having to move your whole life, doing everything in the back behind the scenes that most people don't really see. But at the end of the day, you're still showing up every single day, right? I see you on your Instagram, or I even just call you, I text you, and it's like, boom, you're already on. Or I see you at the gym and you're just grinding nonstop, right? And it's just motivating even for myself, and it's motivating for the team that sees you as one individual, right? Who can cause a ripple effect into something that just makes people show up at a high level every single day. And it doesn't matter where we're at, right? Whether it's a networking event, whether it's, just these meetings in general, or whether it's our weekly meeting for our leadership team, it doesn't matter where we're at. You caused everyone to show up at a high level because of who you are in your heart. And I just want to say thank you for that. And that's something that people don't really see behind the scenes. But it's the reason why we are here. It's the reason why we're growing. And it's the reason why, ultimately home will have the impact that it's leaving.
Awesome. Thank you so much. Thank you for those kind words. All right. We are going to bring up some of the main speakers. So we're going to bring up Jay Rodriguez and Bryce to answer any questions that you guys might have. So feel free to put them in the chat. We have some questions that are rolling on through. So let's see. Let me pull some up. We have one question for Jay. Jay, given the current political climate, what exactly do you see lenders are doing today, and what can we do as a community to circumvent them?
I think the biggest thing that you're seeing these organizations do is you have leaders that are afraid to make a mistake because you don't want to necessarily have buybacks, and you have leaders of organizations that are saying there's a white and black, and then there's this gray area, and this gray area is better for the people that we want to serve, and we're going to go ahead and play in this gray area. What I'm referring to is essentially such as DACA lending, such as if you have the renewal or if you're coming up on renewal for your EAD card. So there's not a lot of guidance that has been seen, but something that is kind of just known is that we go through these cycles, whether that's industry cycles, economical cycles, but we also go through regulatory cycles and administration cycles. So just because you get a no from one company doesn't mean, or one underwriter doesn't mean that you can't get a yes from somewhere else. What we consistently find is that companies, when they're making these decisions, it's usually like the CEO who's going to their head of their credit risk, and it's that individual's risk tolerance, and every single audit that they've been a part of in the past, that could be a completely different experience from somebody else that could even be in the same state, in the same city, but they just had a different experience. It doesn't have to go ahead and be a Michigan versus a Dallas credit risk person that had different regulators. I think the biggest piece is just knowing that we still have our fair lending laws. This is something that you still have lenders that want to lend, and until it's expressly said that you cannot do this, there's got to be a way to be able to fight for your file, fight for your client, and fight
Absolutely.
fight for our people.
So that being said, keep on fighting. So look for those exceptions. Now, next question. This one's a really, really funny one. So Bryce, I looked up your production on MMI, and you have been consistent in a downward market. What's the secret?
I don't know if there's a secret specifically. Everybody's always looking for that. But I think it kind of just goes into, what I was kind of presenting on earlier. I've done the same thing consistently for the last 7 years, right? And there's a lot of details within that. But ultimately, I reached a certain mountaintop as far as production is concerned. And I didn't take my foot off the gas, right? And so I continue to network. I continue to do outreach. I still make cold calls to this day. I think 10 steps ahead in my file. I think a lot of times when, loan officers get to a certain point and they have a certain type of relationship with a referral partner, they're okay with starting to become a little bit more lax. And if you mess up a deal, and what I mean by mess up a deal is not closing late, because closing lates happen all the time. But if you're not taking the proactive approach of thinking 10 steps ahead and letting them know, hey, drawing awareness that here's where we're at, here's what I'm going to do about it, and here's where we're going next, and when you're going to hear from me. If you're not doing that and you're closing late, you will lose. You're slowly going to lose referral partners, and there's other hungry loan officers out there that will come after your business. And so it really is operating at a very high level, doing the same things over and over and over again, and not being lackadaisical with the approach with your referral partners, with your company, with your ops team. That's ultimately, it's proven a playbook, I guess, that works.
Yeah, there's another question for Bryce. It says, when is the right time to scale your team? So take us back to like when you were a single man producer, and when did you bring on an LOA or a processor? When did you start to really scale your team, and what's that indicator that you need to do so, and how can you do it seamlessly?
I don't know if seamlessly is the right word, because there's always going to be bumps, as you hand that baton off. But for me, it was 10 units. At 10 units, I eventually reached the point where I couldn't do all the build outs. I couldn't do all the pre-approvals. My face-to-face meetings and outreach was starting to lack. And that's when I knew I needed to bring on somebody. And what I call this person is a little bit different. Everybody has different, vernacular for it, but I call them a pre-approval manager. And so the very first step, if you're, when you reach that pillar where you're just tapped out, in my opinion, is you need to bring in somebody that can do all of the income build out and 90% of the origination. So in a perfect world, I knew for me that I was the best one to do the initial intake call with the client, kind of, get a 10,000 foot view and start to think ahead as far as how I'm going to structure this. And I knew I was the best one to do the pre-approval call. So in a perfect world, if I could do the intake and the pre-approval, and I could fill that gap with somebody else that could do the income calculation, the credit pull, the analysis on the credit report, and basically get 90% of that file originated, I knew that I could have a 15-minute intake call, a 15-20-minute pre-approval call, finishing up that last 10% origination, and set that client and agent up for success as they go on their house search. That just frees up, I don't know how, a couple hours to a couple days worth of work, depending on how difficult that income and scenario is on the client. And that led me to the next step, 15, 20 units. And you start to bring in more and more people. But ultimately, I think it's a feeling, and I would say for most, it's probably around that 8 to 10 units per month is when you need to bring on some support to help backfill. That's going to then open you up to stay in those pockets where you're really, really good and kind of running the show and quarterbacking.
Awesome. All right, last question for both of you, and let's try to answer this in like a one-liner, like one sentence. So this particular person looked up both of you guys on NMLS, and they noticed that you both were in retail and in wholesale. Recently I love both, by the way. I think in a healthy economy, we need both. And recently the word that has been coming to me in this season is, why does someone have to be wrong for someone to be right? And, I feel that very strongly when it comes to retail and wholesale. They both offer different products. They have different systems, different technology, and it's great for consumers. But that being said, can you touch on how retail and wholesale have shaped your life in like one quick sentence or phrase?
Jay, you want to take this one first? You want me to go?
I'll conquer it first. I think retail gave me the roadmap as far as to see how a loan could be manufactured. And namely, when you looked me up, I wasn't just at one company. I was at one company for a long time, but I jumped to many different retail operations, and every single different organization manufactured a loan differently, but they did it their way. What's interesting about wholesale is that we have the opportunity to manufacture that loan so many more different ways, but we also get to do that every different way of every wholesale lender that we work with. So you get inefficiency if you are just going crazy. But being in retail, and especially at a firm for so long, I was able to go ahead and create processes. They weren't my processes a lot of the time. I was required to use their processes, but it's something where you can see, how do I model this? Without that experience in retail, I wouldn't have been a successful wholesale loan officer. I would have probably have had to find a mentor that found those models from their experience in some other company, which probably was retail or wholesale at a certain point. But it just gave me the opportunity to essentially learn my craft, hone it, and then now I can essentially implement it in the way that I find best for myself, my team.
Awesome. What about you, Bryce?
Very similar. I would say for a one-liner, the statement or phrase that comes to mind is, you can't expect what you don't inspect. And so coming from retail, going into wholesale, I think a lot of people, when they get into this industry, they think, hey, I'm just going to get a loan and I'm going to throw it at board and it's going to get closed. It's going to get fixed. And I'm going to make a ton of money. The problem that I see a lot of loan officers make is that they don't have a very good understanding of the file from the very beginning, and they just pass the baton with no direction of where to go. And it creates all these gaps in communication, frustrations, late closings, upset referral partners, et cetera. And so a saying that I'll often use with my team and my companies, you can't expect what you don't inspect, meaning you need to have, whether you're retail, wholesale, whatever, a very, very thorough understanding of all of these buckets to close a loan on time, the story, the down payment, where it's coming from, who it's coming from, the income, red flags that I see down the road. And you need to be able to package that story up so that your team can run the play. And if at any point that play changes, you are the quarterback. You got to restructure the play. You got to run a different one and get them back on track so the file doesn't derail.
Awesome. Love it. All right. We're all out of time for Q&A. So thank you so much, Jay. Thank you so much, Bryce. So there is a QR code that we're going to pop on this screen. Join now. If you want access, if you liked what you heard, if you were inspired, if you were uplifted with some of these industry veterans, feel free to join us now. You're going to get free coaching. You're going to get access to these amazing, powerful meetings. And, you know, if you are watching us, I have one last message that I want to say that I alluded to in the beginning. You are not your production. You are not your production. However, we do want to give you all the systems, technology, the people to empower your production to take you to that next level. Here at home, we believe in you. We believe in your purpose. And we understand that it's going to take people that have a heart that wants to serve their community to really educate them on the mortgage process, all the different options, and not be so transactional. So if that's you, if this spoke to you, connect with us. Follow us on Instagram. Follow us on LinkedIn and Facebook. We definitely want to be a part of your circle. And last slide before we go, every single Thursday, our team is going to be here. This is the one meeting that you need. You don't have to go to Vegas. You don't have to go to a conference. You can tune into this meeting, get all of the updates that you have, and we're going to try to condense it into 1 hour so that it's the most powerful meeting every single month. So thank you so much for tuning in, and we'll see you soon.